What if the BRICS nations, a powerful economic bloc comprising Brazil, Russia, India, China, and South Africa, implemented a shared blockchain-based payment system? This idea, once considered far-fetched, is now becoming a topic of serious discussion among economists and policymakers. Imagine a world where these nations, with their diverse economies and vast populations, could transact with each other seamlessly, bypassing traditional financial intermediaries. This would not only streamline transactions but also reduce costs and increase efficiency across borders. This proposition, once a fringe idea, is gaining traction as blockchain technology matures and the BRICS nations assert themselves on the global stage. The potential for a unified payment system is becoming more realistic with each technological advancement. The potential implications of such a system are profound. It could revolutionize the way international trade is conducted, making it more efficient and less reliant on traditional banking systems. It could reshape international trade, challenge the dominance of the US dollar, and usher in a new era of financial inclusion for billions of people. This would be particularly impactful for those in rural and underserved areas who currently lack access to traditional banking services. This essay delves into the economic and technological feasibility of a BRICS blockchain payment system, exploring its potential benefits, drawbacks, and global implications. We will examine how such a system could be implemented and what challenges it might face. The rise of the BRICS nations represents a shifting global power dynamic. As these countries continue to grow economically, their influence on global affairs is becoming more pronounced. These nations, accounting for a significant portion of the world's population and economic output, are increasingly seeking alternatives to the existing Western-dominated financial order. A blockchain-based payment system could be a key component of this new financial architecture. Blockchain technology, with its promise of secure, transparent, and efficient transactions, presents a compelling opportunity for the BRICS nations to reshape the global financial landscape. By leveraging this technology, they could create a more inclusive and equitable financial system for the future. To understand the potential impact of a BRICS blockchain payment system, it is crucial to grasp the economic weight and influence of these nations on the global stage. Combined, they represent a formidable force in the global economy, with each nation contributing unique strengths and resources. Let's consider some key figures to put this into perspective. The combined GDP of the BRICS nations exceeds $26 trillion, representing a significant portion of global economic output and showcasing their collective economic might. This economic powerhouse is fueled by a combination of abundant natural resources, advanced manufacturing prowess, and a burgeoning tech sector that is rapidly innovating. Home to over 3 billion people, the BRICS nations account for approximately 40% of the world's population, making them a significant demographic force. This vast pool of consumers and workers represents a significant market and a driver of global economic growth, with immense potential for future development. Intra-BRICS trade has been growing steadily, exceeding hundreds of billions of dollars annually, reflecting the deepening economic ties between these nations. This growth highlights the increasing economic interdependence among these nations, creating a strong incentive for a more efficient and cost-effective payment system that can facilitate smoother transactions. The sheer scale and diversity of the BRICS economies underscore the potential impact of a shared blockchain payment system, which could revolutionize the way these nations conduct business. By streamlining transactions and reducing reliance on intermediaries, such a system could unlock significant economic value, foster greater trade and cooperation among these nations, and pave the way for a more integrated global economy. Before delving further into the potential of a BRICS blockchain payment system, it's helpful to understand the underlying technology. Blockchain, at its core, is a decentralized and distributed ledger system. Imagine a digital record of transactions, replicated across multiple computers, rather than being stored in a single location. Here's a simplified breakdown of how blockchain works. When a transaction is initiated, it's broadcast to the network of computers, or nodes. These nodes, using cryptographic algorithms, verify the transaction's authenticity and the user's authority to make the transaction. Once verified, the transaction is grouped with others into a block. Each new block is linked to the previous block, creating a chronological and tamper-proof chain of transactions. This decentralized structure offers several key advantages, including transparency, security, and immutability. These characteristics make blockchain technology particularly well-suited for financial applications, as they enhance trust and reduce the risk of fraud. Section 4. A new financial order? A BRICS blockchain payment system has the potential to disrupt the existing global financial order in several ways. This innovative approach leverages the decentralized nature of blockchain to create a more secure and transparent financial ecosystem. Firstly, it could reduce reliance on the US dollar as the primary currency for international trade. This shift could lead to a more balanced global economy, where multiple currencies play significant roles. By enabling direct transactions between BRICS nations in their respective currencies, such a system could diminish the influence of the US dollar in global markets. This would allow countries to trade more freely and efficiently, without the need for currency conversion. Secondly, it could challenge the dominance of established financial institutions like SWIFT, the Society for Worldwide Interbank Financial Telecommunication. SWIFT has long been the backbone of international financial transactions, but a BRICS blockchain system could offer a viable alternative. By creating a parallel system for cross-border payments, BRICS nations could reduce their dependence on SWIFT, potentially leading to lower transaction fees and faster processing times. This would make international trade more accessible and cost-effective for businesses of all sizes. This shift in financial power could have far-reaching implications. It could alter the dynamics of global economic influence, giving emerging markets a stronger voice in international affairs. It could give BRICS nations greater control over their monetary policies and reduce their vulnerability to economic sanctions imposed by Western countries. This newfound financial independence could lead to more stable and resilient economies. Furthermore, it could encourage other countries seeking greater financial autonomy to explore similar blockchain-based solutions. As more nations adopt these technologies, the global financial landscape could become more decentralized and equitable, fostering innovation and growth worldwide. Section 5. Security and Transparency, the Blockchain Advantage. One of the most significant advantages of a blockchain-based payment system is its inherent security. The decentralized and encrypted nature of blockchain makes it extremely difficult for hackers to compromise the system. Each transaction is cryptographically secured and linked to the previous one, creating an immutable record that is virtually tamper-proof. Moreover, blockchain promotes transparency by providing a shared, auditable ledger of all transactions. This transparency can enhance trust between parties, reduce the risk of fraud, and streamline regulatory oversight. For the BRICS nations, which have diverse regulatory frameworks and varying levels of financial infrastructure, the security and transparency offered by blockchain technology could be particularly beneficial. It could help build trust in cross-border transactions, reduce the potential for corruption, and facilitate smoother trade flows. Section 6. Speed and cost revolutionizing transactions. Traditional cross-border payments can be slow and expensive, often involving multiple intermediaries and currency conversions. A BRICS blockchain payment system has the potential to revolutionize this process by enabling faster, cheaper, and more efficient transactions. By eliminating intermediaries and automating processes, blockchain can significantly reduce the time and cost associated with cross-border payments. This increased efficiency could be a game changer for businesses, particularly small and medium-sized enterprises, which often face disproportionately high transaction fees. Furthermore, blockchain can facilitate real-time settlement of transactions, reducing the need for lengthy clearing and settlement processes. This near-instantaneous transfer of funds could enhance liquidity, improve cash flow management for businesses, and facilitate faster trade cycles.